Good day, everyone. I'm Sergey Yedeseyev, the founder of Alternative Exchange, a crypto derivatives exchange platform and derivatives trading terminal Option Lab. This tutorial was intended as a continuation of the video about deposit increase, which came out recently. Thank you very much for your views and likes. I realized that the topic is interesting and useful to people. One of the questions I received from subscribers is whether it's possible to use the strategy I talked about in the last video all the time. I want to remind you that a deposit is primarily a bet, not an investment. We're all adults, we understand everything. If we want to increase our deposit by 1000%, we have to make a bet in this game. And betting is always associated with high risk. But there's possibility to get a high income. Increasing the deposit tens and hundreds of times is always a big risk. But you only risk your deposit and nothing else. In the last video, people said that there is a probability of not making money using the strategy I've talked about. In the last video, I said to do this. You need to find short series of call options of strike 18, buy them for $100. The price goes from $100 to $1,000, then you need to fix a profit and get a tenfold increase. The second round is to repeat the same thing, but with $1,000. And after that, your deposit increases 100 times. It's a simple technique, but it works. The main thing is to catch this growth. Whether you will use this technology or not is up to you. My business is to show you the technology, to demonstrate how to do it with options, to show that by trading options you can increase your deposit from $100 to $10,000. In short term, the probability of such growth may be small, but in the long term, any probability can be realized. Take the COVID pandemic, for example. What was the probability that such event could occur? That the entire planet would be closed down, borders would be closed, and the price to oil futures would go to negative. There was no such probability. No one could even imagine the possibility of such an event happening, and you can think of many such examples. For example, what is the probability of Russia being in an oil embargo? A couple of years ago, no one would have even imagined such a thing. You have to look at it from two sides. On one side are the people who price options, market makers and other market participants who quote options. All of these people use mathematical probability models with different distribution densities, but they can't see into the future, neither can you. Therefore, any strong price change is sudden. No one knows about it, it's unexpected, that's why it's strong. Something will happen that will scare or motivate the market whales, change their mind. Like what happened with Bitcoin. The price changed because the interest of investors and speculators changed. That's why I recommend taking options as cheap as possible. The losses will be small in the extreme case. Bitcoin cannot go down or up forever anyway. Sooner or later, the price will change. Bitcoin is a digital gold. Even if the price goes down, Bitcoin itself won't just disappear. It can't be just turned off. I think this technology will develop and will be introduced into world's economy, but that was a lyrical digression. Let's talk about more advanced strategies to increase your deposit. I think that one video will not be enough for this topic. If there's a lot of interest, I will make another video with even more advanced strategies. Today's video I would like to dedicate to deposit increase with the help of vertical spreads. I will tell you about everything briefly, and after that you can use this strategy to deposit increase or other purposes, investment or speculative. First, let's assume that the price of Bitcoin will rise. Let's take some short options right now. Okay, I've chosen these options here, look. So let's buy 1,000 of these options, which is practically 1 Bitcoin. So our chart has opened up. Let's take a look at it. Now pay attention. You don't expect the price to go up forever, especially during the time till expiration. The price may grow by 1,000, 2,000, but I do not believe that in such a short time it will grow twice its amount. So what is a vertical spread? It is when we buy the near strike and sell the far strike. With the premium for selling the far strike, we finance the purchase of the near strike. By doing so, we reduce the cost of our strategy. Thus, we reduce the risk. That's why I always favor this strategy. Let's see what we can use here. So, we bought the near options. Now we will open a long on the near strike and sell the next strike. That's the vertical spread we have. The simple math of a vertical spread is as follows. The maximum profit, this cap right here, calculated like this. From the sold strike, we subtract the bought one. If such movement occurs in the next few days before expiration, if the price enters this zone, we will get a profit of $425, and our bet was worth $75. Again, such strategies will not bring quick 100-fold and 1,000-fold growth of the deposit. Let's forget about illusions. We have to catch the movement, wait for options to become cheap, for people to relax, and potentially for an event to occur that will move the price. When can we expect a strong move? When price has been in a narrow channel for a long time. The longer and narrower the channel is, the stronger the price move of that price channel will be. Let's go back to the chart. In order to provide us with profit, the price needs to grow by 1,500. This model can be built not only with call options, but also with put options. But it will be a bit more expensive with them, because there is a different volatility curve. The higher this curve is, the more expensive the vertical spread will be. But basically, the lower the volatility level, the cheaper the vertical spread. Keep that in mind. But the paradox: the higher the price of the vertical spread, the less profit you will make. I suggest we move on to the next series with a later expiration and a different number of options. I will work with call options, but you can also work with put options depending on how you expect the price to move. Let's take those options that can make a maximum profit of 1,000 points. So we need to choose strikes with 1,000 points between them. For example, 25 and 26. So let's assume that we sell 1,000 of strike 26 and buy 1,000 of strike 25. So we have the following. This is a spread for a longer expiration time than the previous one. The maximum profit is $1,000 minus 170. $830 is our profit. Shorter series will be cheaper, but there's less time till expiration. By the way, you don't have to work only with Bitcoin. Look at Ether. All series are available. Also, look at Matic, a great cryptocurrency to trade. Also, check out Doggy. Musk will tweet something about the Doggy, promote an idea, and the Doggy could fly up. Meanwhile, I am waiting for your likes if you liked the video, if it was interesting. Write your comments, ask questions, I will be glad to answer. Criticize me if you want. If you're interested in more advanced strategies to increase your deposit, then write about it in the comments and put a like. Then I will make another video with more complex strategies, and believe me, I do have something to demonstrate. Subscribe to the channel. I wish you successful options trading. Good luck. Goodbye.